in this market condition, because this is like really strange and really crazy, I think it's more important than ever to take notes of the things you notice in the market, either patterns or things that happen, or whatever that is, because in the future, maybe like 10 years or maybe less, maybe more, who knows, you will be faced like a similar situation, right? Of a market crash and things not going well. And if you didn't take note of your mistakes, then you won't be able to improve at that time. You won't remember what happened here. Okay, so you want to be able to take note of all the mistakes you make, like everything that happens, things in the market, anything of the sort, and then you can reflect on that later. Okay, so what I did is quite simple. I began a document on Google Drive, and I basically just take notes of like so I'm planning to do like and even keep this for the future. Like one day, you write your notes, you put the date, then you separate that by month, and then by like one document could be like 1 year. Then you can go through that. Like you don't have to take note every day, of course, but once you notice something about the market, then you're able to kind of take notes and keep track of things, and that's gonna help a lot. Okay. So what's up, Jason? Welcome, Jason in Australia too. Perfect. Okay. So what I'm gonna do is we're gonna look at some pairs, and one thing I should have done before is I should have cleaned my chart because I want to kind of have a fresh perspectives on things. But yeah, we'll do that. Okay, we'll do it that way. So I'm gonna try to show you guys what I think about. Wrong screen, right screen. Awesome. Can we do that? Okay. We'll do it that way. 1 second. It's been like a long time YouTube, or actually it's been a long time I did the YouTube live and YouTube changed their interface. So it's okay, we'll deal with it. Awesome. Go to the charts. Here we go. Perfect. And wait it to go bigger. Awesome. Perfect. Cool, guys. So here's what we'll do. And I want to go to some pairs. And basically, I'll show you kind of how I changed my style right now based on the market conditions. And how you can adjust your style too in the future, okay? What I'll do is I'll go to a bigger picture view of things first. And again, if you have any questions, make sure you comment below in the chat. I want to kind of see your questions. So I'm just going to try to have the chats not too far. Okay. Colin says, welcome Garrett. Colin says, had a couple weeks of trading 1 hour, forward 1 hour until the last couple of days. How volatility screwed me up. Okay. Perfect. Yeah, we can talk about that. Awesome. What's up, Paul? Welcome. Awesome. So what we'll do is, yeah, we'll try to talk about how to adapt to the current market condition. Okay. And one thing to note is that with the big moves we have, there's going to be more potential for fake breakouts and more potential for fewer reversals. Okay. And what I mean by that is we have an example here on AOD cap. So we have breakouts, but price might come back in. The thing that comes with that is that yes, we have a tendency for like false breakout, but at the same time we have a big tendency for big breakouts. Okay, so that's just something you have to keep in mind. We have more false breakout, but a good breakout tend to work like really well. And if you're not trading breakout now, I highly recommend you get a strategy for breakout. In the past few weeks, I've been like trading mostly breakouts and trends, less reversals because it just don't happen as often. Okay, I could show you the Telegram thing I have with my algo. So my algo sends me an alert every time there's a trade setup happening on Telegram from myself only, and for our student with the trading assistant. But in the past week, there's been like three setup, which is not much, on 4 hour chart and 1 hour chart. So something to keep in mind. Now, what I want to do is basically we'll use the same principle we use all the time. Right? We use the zone, the market phase, so support and resistance areas, and basically we'll kind of look at how can we trade this. And two things to keep in mind is that you're gonna have to trade trends and breakouts. That's what you're gonna have to trade if you want to be able to make a killing in these market conditions. Okay, if you want to stick to reversal, that's fine. You just you have to be more selective, and that's fine too. But you're better with trends and breakouts at this point. Okay, so what we do here is quite simple. I'm just going to clear this up a little bit. I'm really like due for doing my charts again, so we can remove all the drawings. That's fine, and we'll take off the Bollinger Band because we don't need it in these conditions. So what we'll do is quite simple. We'll go back in time a little bit, and we want to look at the market phase. Okay, if you don't know what that is, I've done videos on that in the past. You can search for them on YouTube, or it's in the Academy in detail. So in the Disaster Academy, which is linked below if you want to apply for that. What we do is we look at the market phase. We look at whether the market is sideways or trending. And I'm just gonna like draw some boxes because that's the way that I prefer to do it. Okay, we'll be beginning here. I was place that was like kind of sideways. Let's just start with that. Okay, and then we go to this phase, which is also sideways, right? We go down here and around there. Okay, let's say, and this is approximate. I'm just doing this because that's in the past. We just want to know like where it is in the past, so we can trade better in the future, basically. Now we had this, so we had this sideways market. Then we broke down of this market, okay, right around here, and then look how price made a beautiful pullback right here to the previous support. Okay, that's really nice. So in normal times, what you can do, and you can even do this now, but what you can do is you can basically, when price is in the range, you look to buy at the bottom, sell at the top, right? Quite simple. When price breaks down of that, then you look to sell when it comes back to the previous support, not turning a resistance. And with the algo, I do this a lot. So if it's gonna break down, I basically place my zone a little bit below, and then I look for better trades there when it comes back to retest the range. Okay, and you do this on like lower time frame. So here I was a daily chart. You can do this on like a 4-hour chart or 1-hour chart very well. So that's one thing. Now, because we had a breakdown, now we assume we'll be in a downtrend, and in fact we were in a downtrend back then. So price went down, came back to retest, went down, and now we look at the highs and the lows, because when the highs and the lows change, that's when our trend stop, basically. Now we're here, so lower low. Now we make this high, this low. So still good. Then we come back here, and then we make a higher high. So sign that the market is gonna change now, and something is gonna be different. So what we'll do is we'll identify this, and I will assume this is now a sideways market. So I will draw this line right there, and basically we could look to buy here, although now it didn't work. Okay, it's a breakdown. Or you could just like not trade because it's not clear yet whether it's sideways or not. But worst case, you place a trade here and it doesn't work, which is fine. Breakdown. Now we do a low here. We come back, high, come high again, come back at the low. So this is sideways right here. Okay, we actually like have kind of like a false breakout in both direction. Just go forward a little bit. Okay, well, let's just say it respects the range because it's quite similar. So we have to look for more things to create a high or a low, or I need to create a range or breakout, but let's just say that that's like pretty much all the same. Okay, because you probably didn't have a breakout here anyway, because you come back inside. So that's it for now. By the way, we have a nice trade setup here, which we can go over after on a daily chart. Let's see how that goes. So and now we wait for the breakout of this breakdown. We break down here, come back to retest also the range, come back down. Now we have a downtrend. Okay, we come back down. Which is like a little bit strange because we have a high here, then higher high, but we do come back down quite fast after that, and that's where we are now. Okay, so that's what is caused by the like uncertainty in the market now, is we have like these big moves. So big uptrend on a daily chart, big downtrend after that. Okay, and basically now if you notice that, right, we're coming back to retest this right here, previous low turning into a resistance. So we bounced there only one time in the past, but I strongly believe that when price is in a moderate trend, so like not a strong trend, not a weak trend, like a moderate one, it will come back to retest the previous low in a downtrend. So for example, if you have this, right, let's say you have this over here, Okay, this would be how a strong trend works. Okay, so it's like doing a low, doing a high, doing a low, doing a lower high, doing a low, doing a lower high, and they're far from each other. Okay, now this is how a this is how a moderate trend works. So basically, it's doing a low, it's going back to retest, it's doing a low, it's going back to retest the same previous low. Now it's going down, it's going back to retest the same, going down, and so forth. Okay, so basically it's always going back to retest the same like previous support or previous resistance on that trend, and that's good because you can trade that. You know where it's gonna come back. And here's a weak trend. So when it's weak, it will be like this. So you make a low, then you come back high, then you make a low, then you come back high, then you make a low, and then probably you reverse after that. Okay, but that would be like a weak trend because we always come back beyond the low of the previous the previous low. So that's what you want to pay attention for. Okay, how strong your trend is, and based on that you can trade. If your trend is strong, you can pretty much buy anything, or like if it's an uptrend, buy anything. It's gonna probably work. But then you have to have a strategy for that. If it's moderate, you can go on lower time frame and look for a bearish setup here, like we have this example right there. So that's really good. Okay, I'm gonna have a quick look if you guys have any questions so far on that what we talked about. Awesome, thank you, Paul, for spelling my name right. Perfect. Can for sure post your questions. I'll be looking at them very soon. Yes. Yeah, and this is a good thing. So Dan mentioned the fact that the bigger time frame now don't work well, and they've not working well for me for the past for like a very long time. So I trade a lot more on lower time frames. And basically what we would do here, and like even anyone in this, okay, is we would go on lower time frame. 4 chart would be the limit right now. Okay, it's still hard. Ideally, the 1 hour chart would be better to look for trades, right? And what we want to look for is two things. Well, we have a few options here. Either so in that case you can look for like a reversal on a lower time frame, like the 30-minute chart or 1 hour chart, with the same strategy I used, the Bollinger Band reversal. That works fine. Okay, so now we get no setup so far on the 1 hour and 4 hour chart, but I'm thinking we might have had a setup here on the, let's put the Bollinger Band. We had a setup here that didn't work. We had a setup here that could have worked to 2 to 1. Yeah, we had a few setup here, but that's not the best way to do things. Okay, because we've said in the past that in this case here, reversals don't work well. You might prefer to wait for a trend and then buy in that trend. Okay, so what we do basically is we look at how price reacts when it's hitting this point here. Okay, and then we have a few options. So look, for example, at this point, right? Price coming back to retest the previous low. And now what do we have here at the moment in the market in the forward chart? Maybe if you go on the 1 hour chart, it could be better. Let's see. Okay, yeah, perfect. So what do we have here on this chart? Basically, we have this sideways market right here. Okay. That's like approximate. Okay, I'm not going to be like super detailed here. And then we break out of that. So let's just say we break out like around here, and then we go up, then we come back down, then we go up. So we have like a kind of like a start of a trend, but it seems like we're not going back up further than that point here. Okay, and that means that the pullback is probably about to end. The pullback or retracement to the previous low is about to end. So that's a good sign for us. Now we have two things we can do here. Okay. First, but it depends on like how the market reacts to this. The first one is we'll look at a break. So let's say price would form a range with that. Okay. Because it's making like similar highs. So if we're gonna make a range with this. Oh shit, that was strong. Okay. You're gonna make a range with this, and you look for a breakout of the range. So price would like go here, and then break out. Okay, to the downside. You don't want to like trade a breakout on the upside because it's probably not gonna work within the market context that we have overall. But a breakdown works really well, right? So that's something you can look for, and that's a really good trade. The other thing you can look at, let's say we have like no breakout, so or let's say actually we have no sideways market, like price just like go here and shoot down. Is look for something very similar. Is you look for a move to the downside, like a beginning of a trend on this time frame. So let's just draw this a little bit more clear. Okay, let's see what price to go from here, and it just goes like this, and then breaks down from the range. Right, so that's the beginning of a trend, and then you look for a pullback. Okay, within that big trend, it might happen now or later. Like it might be like very soon or later. You look for the pullback, and then you look to sell in that pullback. Okay, quite simple. So that's the option when there's no sideways market, there's no range, or let's say there's a range and there's a breakout, but you miss it. You can always buy. You can always trade on the pullback, sell on the pullback in that case. And the way you do this is simple. It's like what I do all the time. Well, you have two choices. One is the Bollinger Band reversal strategy that I use and that I teach all the time. It's like a reversal, but that you have to have a strong pullback. The other option, or like less strong pullback, but you go in lower time frame. Or the other option is you would be trading a simple engulfing candle reversal. What I mean by that is price goes up, or actually no, price goes down, like this. There's a pullback, and then you have this up candle. Okay, we'll try to draw this as best as we can. Actually, no, fuck that. Let's go here. Let's wait for the loading part. Okay, so it's just gonna be better to draw this. See, sorry, writing before I even start. Okay, let's go. So awesome. You have a downtrend, right? No, I said you have a downtrend. So price goes down, and then you have a pullback, and then price makes a bullish candlestick. Beautiful bullish candlestick. And then price makes eventually a bearish engulfing candle. Like that. This is bearish, so it should be black. Get the point, then you enter below that. Stop loss beyond this candlestick. Then you look for your trade. Like 2, 3 to 1 is easy to get here because you are in a trend, so price actually go back down. And this on the trend works super well. No need for more indicators. That's like pure price action, which is good. But you just have to kind of trade that. So that's quite easy. So yeah, no indicator because you don't need them in the trend in that situation because you have the big context. You have the trend in your favor. Then you have the engulfing candle, which is plenty. So that works well. If you want to trade that, that's really good. I have a student that did backtesting on that. I've like researched that myself in the past a long time ago, and you can get a pretty good win rate with that and pretty decent reward to risk. So if you want to trade that, then I recommend you can look into it, test it out first, and you'll see what I mean by that. Okay, let me just have a look at the chat over here. Awesome. I have some things I want to discuss. Yes, perfect. Need bigger stop. Yeah. Yeah, if price gonna be in a like not strong trend, then you definitely need like more, like bigger stop losses. Okay. By the way, you guys maybe cannot see this. Okay. I'm just gonna try to adjust over here. Let's try to make this better. But basically, so I'm looking at Colin's comment. Colin says if you are in a trend that's not too strong, you definitely need to have more bigger stop losses. But we'll talk about that soon. Cat says, I want your opinion on a strategy I can use with a 90% win rate. Can you kindly clear the chart and apply 220 SMA on 1 hour chart? Okay. Yeah, we can discuss that a little bit later. Okay. One thing you'll know, or you'll figure out quite fast, is that, and that's something that I kind of realized speaking with Nick Mencino, interview coming out tomorrow. Don't miss it. Is the fact that in sideways market like this, no, in sorry about that, in crazy markets like this, isn't that year for an further? We don't need that. Thank you. In crazy markets like this, yeah, it's quite hard to trade with indicators because price is always at extremes, extreme trends, extreme movements, extreme all that stuff. So it's hard to trade with indicators because they're always going to be extreme. And by the way, I sent an email about this to all my subscribers like yesterday, talking about indicators and how to use them in these conditions. Better not use them too much, okay? Because you can look at like the RSI for example. What am I? Yeah, the RSI in this condition is always overbought or oversold, pretty much. Okay, so it's not doing much. And if you trade that, then you're gonna be stuck. So not something I would recommend. But if you want to trade indicators, then that's fine. Okay. Let's have a look at different pair to see if I have an example of what not to trade. While GP USD was a good example for last week as a breakout. Beautiful, awesome. Okay, so here you have a few options, right? And again, this shows how we talk about the fact that price likely to do breakouts will come back inside the range. We have that right here. But what I want to show you here is it's pretty much the same, but it's a little bit different. So we were sideways before, broke down, came back to retest with it like far in the range, which we don't see usually a lot, but in these conditions we see that more. Okay, and then that's where you can look for selling on the pullback. Let's go on our time frame. See if we have what we talked about before. Okay, forward chart. Let's do 1 hour chart, and let's go back. And we'll try to go like candle by candle. I didn't take a trade on this, by the way. I was like at the immigration that day, so to renew my visa, and that didn't work out well. Okay, so here we have, that's like your first try to take a breakout trade, is you look for the range. Now the range here looks like quite big because it's on a 1 hour chart, so everything looks super big compared to the daily chart. But that would be like your, so notice how here you have a range, and then before the breakout you have a smaller range, okay, like a tiny range right here. So that could be something to place your trade with. That's pretty good. So when it breaks out of this, let's just use this one here, or this one, doesn't really matter. You put your stop loss beyond the candlestick that broke out. In that case, what we would do is we would go and short. Okay, let's just say we take the extreme condition. We go here, stop loss beyond the candlestick that broke out of the range, so this one here. And we can look at 1-to-1 or 2-to-1. Okay, I usually do myself 1-to-1 for these trades, just because we never know how far it's gonna go, and they win a lot with 1-to-1, so you get a very good win rate. So here we go. That's the first one. Okay, and that's just based on the range, the breakout of that range, and that's a possibility to make money. Okay, I traded this last week or the week before on AUD. I think USD or JPY, I'm not sure, but it works well. Now, we'll go back in time. We'll go forward in time, back in time because it's back. And here's what happens. So we have this break. Now we come back within the range, which we don't see usually. We had a few setup here along the way. You just see that. That's kind of like false reversal that you don't want to take because it's not in the right market condition. So basically price comes back in the range. We have this nice reversal setup here with the orange band, which I would normally take, and we have another one here before, but because that's in a, like, that's back in the range, I would not take that. I would not take that trade ever. Okay, because we're going back in the range, signs that the move to the downside failed, so you don't want to trade that. Now we come back. Okay, we make this high, And basically here in normal times we would not trade because we're back in the range, and that means that we failed to break out. Now what I'm curious about is what about like when we break out of the range again. Okay, so I'm gonna put a line on the chart. Let's go with this one or this one, and I want to identify this level right there. Okay, so it's here. All right, perfect. So now we are on the 1 hour chart. Price went beyond the range, came back down, and then did a pullback here. We don't have any engulfing candle like I like here in that particular case, because here you would enter below that, doesn't work. Here that's an engulfing, so it doesn't work. And that's why you want to compare your multiple time frame too sometimes. Let's see on the forward chart what we have at this level. That's our range, that's our breakout, first breakout, come back to retest here, engulfing candle. See, right here, that's a good one. So on there, you would enter below the engulfing candle, of course, or the close, it's fine. Stop loss beyond, and then risk reward. I would say like at least 2 to 1. You can go for more than that for sure, but minimum would be like 2 to 1, and even 3 to 1 in that case. One thing you can do, and that's going to help you know if the trend is strong or not, okay? Because what you want to do is like you want to stay in the trade as long as the trend is strong, of course. That's the ideal case. Is if price is below the 20 EMA, and basically what you have here is the Bollinger Band. The middle band is a 20 SMA. Okay, SMA EMA also is the same in that case. If it's below that, then it's always pretty much a strong trend. If it comes back beyond that, then the trend is dying out. You can just see yourself too with the highs and the lows. See how here we go down, we make a low, we make this high, then we have another engulfing candle. Once again, come down, come back up. This is our high. Come down here, come back up, come down here, come back up, come down here, and come back up right there. And that's where our trend is like dying out. Okay, and in fact we did just come back after that. So that's something you can do. You can like trail your stop loss if you want on this, like at the highs and the lows, and let's just say you were to do like 2 or 3 to 1 or 2ish. That's all good. But let's think about the fact, like the option where you would like trail your stop loss over time. Okay, as price makes new lows and new highs. So price makes a low here. Then you leave your stop loss at a normal point. Price makes a high here. Once you see price going down and making a new low right there, you will move your stop loss to the previous high. So move your stop loss right here. Okay, that is, I believe, like around 2 to 1. I'm thinking. Yeah, 1.6. Okay. And now, once price makes this low, price makes this high, then makes a new low here. Move your stop loss to the previous high. So let's see that. I'll draw again. Move your stop loss right here. Okay, that's like beyond, I think beyond 3. Right there. Oops. Okay, yeah, pretty much 3 to 1 or a little bit more. It's fine. Awesome. Then price makes this low. Okay, we said that makes this high, then makes this low. You move your stop loss right here. Stop loss here now. And then price comes back down, make this low. Okay, make this high, makes this low, and that's where you can think right away, like there, to move your stop loss to here, beyond the high, because we made too high, right? We've been back down here, made a new low, came back to a new high, new low, and they're the same. So you put your stop loss here, get some fairly tight money management on that trade now, because we're losing momentum. Shit. Okay. Right here. And then you pretty much have 8 to 1 if you want to risk, which is awesome. And of course, you get hit. when price comes there. But that's pretty much the perfect time to go out of the trade in that case. Okay, and that works really well like with a strong trend. If the trend is not too strong, you cannot do that. It's gonna be hard to do because you're gonna be stopped out with not much profit. While here, this is worth it because you get a really big winning trade. Okay. Now the other issue we have to cover is the issue of, are you going to be awake when you have to manage your trade? Maybe. So it's a forward chart, so maybe yeah, it's possible. But will you be awake when you have to take the trade? Let's see for me. That's 9 p.m. Okay, not too bad. As I said, I was, or actually 10 p.m. As I said, I was at the immigration that day, so I didn't pay attention to the market at all. But if you are in the market there, that will be like a perfect trade, and that will completely make you a week. So you can think about that for now, okay? And that's just with basically just price action. Like we didn't look at any indicator except after that to show you the trend factor, how strong the trend is. But that's something you have to accept, right? Other than that, the rest is all pure price action, which some people like. I don't care, I treat whatever works, but you can do whatever you want. I'm just going back on the chat here quickly, and I want to hear your thoughts on this. By the way, like, do you like this kind of trade setup, or no? And if you have any question about them, we will be covering them. Thank you, Ayas. Perfect. Just showing some love. Awesome. Yeah. Other thing you can do is, of course, you can add to your trade. So as price moves in your favor, you can add to your positions. That works well too. So why not, as an example? And that's just like me showing up an example here, showing out an example, because I don't do that myself. But why not adding every time you have a new engulfing candle in this market? Okay. Basically, you have your first trade here, move your stop loss there. Then you have this, so basically you have no risk on that trade anymore. You're good to go. But then you have an engulfing candle. So you would add a second position right here. So that's your second trade. It could be this like a slightly lower size. Like let's say you have a 1% regular. That could be 0.5%. Who knows? You decide that. Then you go here. Now your first trade, we said you move your stop loss here, but your second trade that you enter here, your stop loss is there. You can move your stop loss also here. Okay, why not? And then because I have a new engulfing candle right here, and that, by the way, you would move your stop loss here, not there with the low. Like you would wait for price to make a new low here with your stop loss there. Now we have another engulfing candle right here, new entry there. Okay, stop loss beyond the high, and then basically you have one trade with the stop loss here. Well, two trades with the stop loss here. One is in reward quite a bit, and then you wait for price to go down. Your first trade is okay. Second trades, third trades are good here, and then you wait for, so price makes this high, then this low. Then you can bring all your stop losses here for all trades, and so you have like 3 trades, and then you wait here. Well, your stop loss. Oh, we have an engulfing candle here again. Awesome. So new entry there. Okay, and then stop loss here above. Now we have so we move a stop loss here for all trades, basically, and yeah, we're stopped out here for all trades. Okay, one is gonna have this big 8 to 1. One is gonna have about so we enter here, I would say about like a 5 to 1. One is gonna have the one that you enter here. It's gonna have maybe like a 2 or 3 to 1. Actually 3 to 1 easily. And the one you enter here is gonna have a 1 to 1 or so. Okay, not bad. That's pretty good. If you have a like 1% risk per trade on the first one, that's 8% on that trade. Then the other ones is like let's see, you take half, so 2.5 plus like 2 or 3. That's good. Okay, that's really good. That's a really good week just with that. and you didn't take more risk because the only thing you had is like one trade, move to break even, one more trade, same risk, move to break even, one more trade, move to break even, and that's it. Okay, so that's a really good idea, Colin. I appreciate it a lot. Yeah, good example. I love that. So that's it, guys. That explains how you should trade now, how you should go about things. One thing I need to say is that you will need to monitor your charts more often, and that's just something that I do myself too. I'm gonna look at this right now, like every few hours for sure, because things are happening fast, and that kind of move, if you miss it, you're just gonna miss it, the whole thing. Of course, you could re-enter like along the way. So as we have these multiple trades set up, you can enter along the way, of course. But the big one is happening here. Okay, just something to think about. So you have to look at the chart more often. But in any case, you can still do it. Even if you like miss a trade, you can re-enter. You can like manage your trade properly. So no reason not to be in the market at this point on that trade. Okay. And of course, you gotta test this out first. I'm just saying this because I know how things work, and I'm gonna trade that. But if you are not sure about how things work, you can definitely test it out. So that's it. If you have any questions, let me know in the comment. I want to answer a few questions now before leaving. I'll stay here for a few minutes. If you go with what I taught you today and what you learned, that's fine. You can go and apply that for the next week. But I want to hear your thoughts, of course, as always, on this. If you like it, give it a like. I would appreciate it a lot. And yeah, that's awesome. Just stay here for a few minutes more, and we'll go through your questions. Awesome. And by the way, because I get a question a lot about which broker I use, I have not put something below this video, but in other videos, there are links about the brokers that I use in pretty much every video under the description. Now I'm using 3 brokers: Pepperstone, AskTrader, and Oanda. You can use a few of them, all of them if you want. They have for me different purposes, but you can use which one you prefer. It's totally fine. Okay. Yes, getting investment for trading. Go ahead, Cam. That's a good question. So one thing that I'm amazed about is that now there's so many programs that you can use to be able to get money for trading. There wasn't that like 2 years ago. Now it's super good, so you might as well benefit from it. Awesome, Garrett says thank you. I appreciate it. Thank you, Garrett. Okay, awesome. By the way, one last thing is, if you guys are looking for more help, I don't promote too much usually in these videos because these are more to add value. But if you want to get more help, I've put a link below in the description for the academy. Basically, that's a training we have where you get access with like 9 different courses. Plus, you have unlimited coaching with me and other traders that are full time. So if you want to get some help and some like support along the way through these market conditions and even beyond that, check this out. You have to apply first because we select people that are gonna put in the work. People like Jason, people like Colin that are serious about it. And so, if you want to be able to work with us, check out that link to apply, and we'll get no cost if it's a good fit for you at this point, of course. Okay. Um, if I have a track record, where can I get investment? Well, there's so many platforms, right? I was starting a playlist on the channel now that's called platform review, something of the sort, where basically there's a lot. There's FTMO, there's 5%ers, there's Top Step Trader. Those are all platforms that allow you to trade for them with a fees. You have to go through a application process first. You apply, then you go through a process where you have to prove your skills, where you trade for them for some months, and then if that works, they give you money. So that's good, right? That's pretty easy. The other option, if you don't want to pay a fee at first, is to go through ActiSelect, and you need to have a 6-month track record with ActiTrader, and they'll give you capital if you have a score in their algorithm about above 65 after 6 months. So you can apply with them too. That works too. There's so many options, so there's no excuse not to have enough capital if you trade the right way, of course. Okay. Or you can go for private investors, and that's something we help people in the academy. We have a guy in China, Michael Tama, who is trading for investors like a few millions in China. So if you want to go with that, that works fine too. Okay. What about market makers? How do you combat that? Like the manipulation? Well, we can't do anything about it. So we might as well learn how to trade with that, and you cannot combat that anyway. Because you cannot tell like a bank to stop trading or something. It doesn't work, and they don't manipulate the market as much as people think, from what I've seen. So you just have to deal with that. Okay. It's not an excuse to lose money in the market. That's just a bad excuse. Alright, guys. I hope that makes sense. Let me know your thoughts as always in the comment section. If you are watching the replay, I would appreciate. Yeah, I recommend FTMO. You can check them out. Have a review with them if you want to get a discount. Check out our video, and there's a link in the description for a discount with that platform FTMO. Okay, awesome. So guys, I appreciate it once again. Let me know your thoughts in the comment section if you're watching the replay. I would appreciate it. Check out the academy if you want to get some more help. Link is below in the